So let's talk a little more about what's happening right now. There is a particular bill that is in process, or a series of bills in process right now that are pretty exciting. And you and I've talked about these a little bit. Could you tell us more about what's happening today that we should be watching?
Yeah, there's a set of bills called the Invest Act, and I forget what the acronym stands for, but it's everything in DC. INVEST is something. I should have looked it up first.
Alphabet soup.
But yes, it is alphabet soup sometimes. But what this is a set of new laws that help modernize some of the things that early stage investors deal with. And, there's certain areas that we're particularly interested in from the ACA. One is changes to the accredited investor definition. So the accredited investor definition goes back to 1982, which is a long time ago. So it's actually when I started my career.
40 plus years, 45 years old about.
So yeah, just call me old. Go ahead.
Today mine is.
So I, when I see 1982, it's actually a magical date for me because I know exactly, I've been working for a long time now. So they came into place originally as a guardrail for protection against fraud. And there was a lot of different scams and things going on back then, just as they are today. But fortunately, early stage investing has very little fraud associated with it. However, a lot of people that are regulators or legislators see, the Theranos stories or things like that are major blow-ups. And, we just had a presentation on artificial intelligence at the summit, the last keynote that we had, where she was talking about some AI companies that really misrepresented what they had done. But the advantage of today's investing world in early stage companies versus 1982 is that there's angel groups now. And these groups work as teams to look at what a company might be and to have diligence done. So trying to take a set of rules that were put in place in 1982 and just inflate them to today's standard, go through indexing to come up with what today's number should be, was just a mistake because it's apples to oranges. It's not the same world that it was. The other part of that is that the rules that were put in place in 1982 were totally arbitrary numbers. They were just numbers that they came up with to set what the standards would be for somebody to be able to invest in this asset class.
And just to be articulate about that, the numbers you're referring to are the $200K a year. Basically, it's a net worth or annual income limit that was set 45 years ago and hasn't been changed since.
Correct. So there's rules that were requiring the government to look at these and adapt them to today's world. And the easiest thing to do would be just to index it. So we had done a study at the ACA that showed that if they indexed it, it would knock out somewhere around 40 to 60% of the current angel investors. And that knocks out 40 to 60% of the people that might be investing in these early stage companies. And it would be catastrophic to the growth of early stage businesses because they're really hurting to be able to raise money. There's a lot of headwinds that are out there right now for investors of all walks of life and concurrently for the companies that are trying to raise money. So that was part of what we started doing a couple of years ago, is talking to people at the SEC, talking to legislators to make sure they understood what the unintended consequences of something like that might be.
So just to make sure I'm tracking, you're saying that basically the ability to qualify as an accredited investor has become dramatically easier, so to speak, over time as inflation has adjusted, but that line has stayed the same. And so now we have this whole new swath of folks that are able to access these early stage businesses by qualifying, that if we were to inflation adjust and rebalance, that would just be immediately flushed out of the ecosystem.
Yep.
And we think that's a bad idea.
Yeah. And the only thing I would add to that's a very good summary of it. But the world is different than it was. So even though the numbers and thresholds are the same, they're relevant today at the levels they are, in my opinion, because you have this whole structure that sits around the people that are making early stage investments. The vast majority of investments in this class are made through angel groups or groups of people that have a level of understanding as to what they're doing. So some of the guardrails that are in place from the very beginning, because people were doing this individually, are totally different today because of the advent of angel investing, angel groups, and other organized funds and things like that. So what we talked to SEC commissioners about and others was that really what's needed is not just a financial qualification for what's required to be able to invest, in this class, but also a test. So if somebody could say, I'm skilled in investing. I've gone through a series of programs that show me these are the risks. This is what I should be evaluating. This is how I should look at this. So somebody that comes up to you and says, I've got this great product and I'm going to make you 100% return in 6 months. To look at that and say, well, first of all, they shouldn't be saying I'm going to guarantee you a return. Second, it's probably more fluff than reality. So have that level of sophistication. And is it really the government's place to say, you can't invest in that if you have this level of sophistication because you're not a millionaire? So that really made sense with the legislators and the regulators. So included in this Invest Act is something that would add in a sophistication test. So people would be able to show by going through a test that probably would be administered by FINRA that I have the knowledge set to be able to invest in this.
As you may have noticed, we are recording this conversation live from the Angel Capital Association Annual Summit. Now, if you're not familiar with the ACA, this is the world's largest professional organization specifically designed for angel investors. So if you're serious about this ecosystem or just generally interested in learning more, the ACA's education, resources, and community are definitely worth checking out. You can go to angelcapitalassociation.org. And I gotta say, this is our second year live recording in the room, and I had an absolute blast. Cannot wait to come back for future years, and I hope to see you there. A quick note before we continue the conversation. Alongside the Diligent Observer podcast and newsletter, I also run an outsourced operations service specifically built to serve angel networks. My team handles things like initial screening, social media, newsletter prep, platform management, and a whole lot more. The kinds of things that either aren't getting done or shouldn't be done by busy community leaders. If that sounds interesting to you, send me a note. Now, back to it.
So there would be some sort of like a startup investing, series blank, instead of the series 63 or 65 or 7 or whatever these financial exams, there would now be a angel investing test.
Exactly. And there's still discussion as to how that test, and it wouldn't be just an angel test. It covers a lot of different areas that accredited investors cover. So there's still discussion as how is that going to be administered. I think the universal thought now is it probably would be through FINRA, but other organizations such as the ACA are talking to the regulators saying we could do educational programs that lead up to that testing. So it's a great opportunity for organizations like the ACA, where we already have a very strong educational component. I'm an instructor in the ACA educational series, and they're great education for people to know. If you go through the ACA educational series, whatever the test is, you're probably going to be able to pass it. And if you go through those and you choose after going through that education that this is something you want to invest in, again, in my opinion, you should be able to, regardless of what your net worth might be, because you're going to learn. Right? If you have a net worth of $100,000, don't invest $100,000 in a risky early stage company because you think you might be a millionaire after investing in that, because there's a very good chance you would have $0, not $1 million afterwards. Understand that, and you make your own choice.
So tell me more. What else is in this provision? I mean, you said it's a series, and I know there's a number of components.
There's a whole host of different things. I think there's 26 bills altogether that were put together to be this one act. And I'll give you an update of where it stands. It passed through the House of Representatives on a bipartisan basis. It's now sitting in the Senate. So we had some meetings with senators a few weeks ago to talk about where it stands. And there's really very broad support on the Senate, and it's believed that it would pass through the president as well. But there are a few things going on in DC right now that are making anything difficult to get through.
And just a timestamp, we are recording this on April 23rd, 2026. So whoever's listening to this, that's where we sit.
And as you get closer to the midterm elections, things get more difficult to get through, even if it's bipartisan. So we're hoping it gets through and doesn't have to wait till the next Congress to be able to do that. It's, to me, one of the more frustrating things when you have very, very broad support for what this overall set of new rules entails, that because of whatever it might be, you can't get it through. And it's a reality in government. And part of that is by design. You don't want things just going through really quickly without thought, but there's so much going on that, and going back to one of the very first things we talked about, how do you make things feel and seem important to somebody? Well, as much as I care about these rules, figuring out what we're doing in a war is more important. There's a cryptocurrency bill that's sitting out there that there's a lot of mixed feelings on. We don't have anything to do with that one, but that's one that's getting a lot of attention because there's really strong feelings on both sides, one way or the other, about that. So there were other bills that sit there. There's a lot that the government has to do. And to be able to pipe it all through when there's elections coming up and there's so much animosity, at least what you see on TV, to get things done, it's a challenging time. But we're very hopeful it's going to get through.
Thanks for listening to this episode of The Diligent Observer. I'm your host, Andrew, and if you're an angel investor looking for essential angel intel in 5 minutes every week, I think you'd enjoy my newsletter. I send my best stuff, interesting deals, and more straight to your inbox so you never miss a thing. Subscribe today at thediligentobserver.com.